What's up, fam? Let's get into it. I hope you had a great week. I know it was a bear week. The market was down 4.6 this week, lost $1.4 trillion. But if you've been following along with the videos, you either would have been participating or you would have been in capital preservation mindset. Hope you did very well. And if you did, that's great, because as the market goes through these declines, if you're not getting beat up psychologically when those opportunities present themselves for win, it's going to be back into your type of market, your type of trade setups, because you're not getting smoked on the downward move. You're excited. Versus what happens is when you're getting smoked on the downward move, you're getting beat up, you're getting very discouraged. And then you don't even really want to participate when things start going back up because you're nervous. You don't want to take any more losses. So if you've been protective, you've been making some money to the downside in here, you're getting excited because this is what you want to see. You want to see the big drop. I'm going to get into those details a little bit further. I just want to remind ourselves that we're tracking what we see here in the S&P 500 midterm election year seasonality pattern. We've been tracking the red line because the red line is the second year new Democratic president. And if we look at what we've seen in here, so you see January into March, right? January into March, we've had a drop. So if we look at what happened in here, January into March, we had a drop, significant. Then we had a bounce, right? If we look at that in March, we had a bounce. In here, the difference is it says it came back and made a new all-time high. So we didn't come back and make a new all-time high. We topped out at a lower high. But if we look back in here, we see that we saw a big decline from here, a big decline into June. That's exactly what we saw in here, a big decline from March into June. We bottomed on basically June 20th, 21st, 16th, whatever. And then we saw a significant rally, and that's the rally that we crushed to the upside. Here we are. And now coming back September and October, making a new low. Okay, so if we look at where we are in September, coming back down and retesting these lows as we head into October, here we are. Now, reminder, in here, we didn't make a new high. So in here, where it's saying, a double bottom before, seeing a new low into the end of October, that might not be the case. It doesn't need to be one for one. Doesn't need to be one-to-one perspective, but we're following the flow, the same flow. So same flow doesn't mean we're just going to make a double bottom in here. We could see a break of this, just like we didn't see a break of the highs, that we come down, we make a new low, but then we are going to be looking for a bounce into the end of the year. Okay, we're going to be looking for that scenario. But right now, what this is telling us is regardless if we make a new low here or not, we should see a bounce in early October. So in early October, we should see a bounce. And based off of what I'm looking at the charts, it does make a lot of sense, whether the bounce starts this week or it starts the week after as we get into October. And then mid-October to anticipate a big drop, okay, into new lows in November, and then to see a year-end rally. That's looking at each the type of president, Republican or Democratic in year. Overall, like if we look at mid-year election seasonality, pink line average year, blue line midterm election year, we never do very well during this time, during midterm elections. So I know there's always events. We got the events right now. We have Russia, Ukraine, we have inflation, we have now maybe a China, Taiwan scenario, and now maybe president of China has been arrested. There's more events happening nonstop. So, people are looking at what's going to cause this type of move, right? What's going to cause this type of move? Well, you would look for those events to be reversed, right? You would say inflation, CPI numbers are going to start to drop significantly. The Fed pivots, Russia, Ukraine, that settles. Those could be the catalyst that run up. I'm no geopolitical expert or anything, but if you're looking for what could turn things, well, you just look at the same events to resolve themselves. They're not going to resolve themselves on their own. It's going to take a lot of things to happen. I get that. But, what could cause a year-end rally like this? Just like the seasonality for the second-year Democratic president is telling us we should anticipate a year-end rally. So this is what we're looking for. We're looking to see when is this move to the upside going to happen, and is it going to go make a new all-time high? I actually, think there's going to be some more pain here in the short term. I'm only going to focus on ES for this video, but you can basically go look at the same thing on NQ and RTY and the Dow Jones. But I'm going to focus on ES in here. This is the same video I did 3 weeks ago when I was talking about, are we headed for a generational wealth opportunity? I'm excited for that. Okay, so I'm thinking if we're going to see that significant new rally and the events are going to start to turn, I want to be a buyer down in here. And by buyer, I don't mean short-term trades. I mean using the capital that I have plus the capital that you earn along the way down into this range to then say, okay, there's always going to be the short-term trading opportunity, weeklies, playing monthlies, whatever, and options, whatever, short-term trades by going all in and things. As short-term traders, we have the ability to do that, but also getting into the ability to just buy and hold and think about the bigger picture and not worry about the noise around you. Think about buying good companies, dividend paying companies as well, some growth companies, creating a portfolio where you're not so focused on the day to day. You set aside this money, you let it be, you give it 5 to 10 years and you're laughing down the road and not worrying about all the headlines and all the fear, uncertainty, and doubt everyone's going to put in your head when the market hits into these ranges. You think about if the market sees that much of a decline over time, you're not going to be overly concerned. Let's just look at what kind of a decline this would be to come down into this range. 31%, maybe if we get into GP, 35%, totally fine. I like it. Anytime we've seen a significant decline like that in the market, we've always gone up and made new all-time highs. You're just going to have a time horizon and a risk tolerance that allows for that. So I'm excited for that opportunity. I do think the market wants to get there. If I look at this on a weekly chart, if you want complete further details, go back to the video I did 3 weeks ago. But I'm looking at this in here and I'm saying the market, this leg in here, we are correcting from this leg. Okay, we are correcting from what appears to be like a big wave 3, right? A big wave 3. And we are correcting in that wave 3 right here, which I would be looking for an ABC correction. Okay, so we got our A, we completed our B, and now we're heading down on our C, something along those lines. And if I use this, you can see we ticked on the golden pocket. So that's with a log chart on. So I'm going to come into here and I'm going to use this extension target. And we're going to target 1-to-1, which is down at the 327 range. Okay, so if I come back over here, I'm going to take off the log chart from that weekly, and we're going to look at this 327 range. It's going to be in here, right? In here, and that's between the 0.5 and the GP without a log chart being on. Okay, totally makes sense to land somewhere in the zone, which is the back test in here. Getting into the zone, I would be a buyer. I would be a buy and holder. That would be, if you're a buy and holder in here, you're in a lot of pain. If you're a buy and holder after that much of a significant drop in the market, time and price, you're not going to be in a lot of significant pain over time, as long as your time horizon is good. So we won't be focusing on, hey, this is only short-term trades in here. I'd be focusing on, we're going to look for good short-term trades that we could be very aggressive on short-term weeklies and stuff like that, like we always do. But the opportunity to have a side account, like your little side dish, right? You have your side account, you just put that money away, you take care of it, you water it every now and then, right? You don't manage it day to day, and you let that baby grow. And that's going to be the idea, getting down into here. So short term, everybody wants to focus, of course, on what's happening here in the short term. That's the larger term. That's what we're looking at in the weekly. So if we put all this aside and we look at the behavior that we're seeing on the weekly chart right now, we can't just, I'm not going to get into all the charts, but if you go look at Apple, you go look at Tesla, you go look at Microsoft, you go look at all the big dogs, some of them are completing, some of them are already down in those big moves. But when you look at Apple and Tesla, they're just starting, right? They're just starting. So that's basically the names, the catalyst to bring us down into this range. Whereas, names like Microsoft, I didn't want to go through so many charts in here, but I'm going to do it. Names like Microsoft already breaking new lows. I got to think Microsoft has to hit 215. So this is not complete. We aren't over here. Apple, let's go look at this, right? Mrs. Safe Haven over here, it's nowhere near its low. So even just to come back down and do a double bottom at 130 or, slightly break it, it's going to be, there you go. That's totally fine. Microsoft will be completing its correction and Apple will be doing a double bottom, being the strongest name in the market, and people getting ready to buy Apple on that dip. Look at Tesla, right? Potentially, we're just watching a big triangle here on the daily chart, right? Let's get this upper trend line fixed. I don't know why it's drawn like this. And our lower trend line, we bounce in these ranges while the market, shakes everybody out and does all this fear mongering. And then Tesla just comes back down and holds this lower trend line. The market could be down below 3,500, could be at the 327 with Tesla trading at 213. Why? Because look where Tesla is right now. And it's obviously showing us some more downside. Another a move down to 213 is another 20% drop in Tesla. Tesla top 5 market cap in the S&P 500 drops another 20%. There you go. We have our market down at 327. So I am looking in the midterm to, midterm 3 to 6 months, that we have not hit our bottom and that we will hit our bottom in that time. In the short term, we're going to see a relief rally. We have to see a relief rally. We're going to talk about what that's going to look like. So the big picture move is this one. Okay, we're looking at this one in here. Okay, the short picture move is we're going to focus in here on the behaviors that we're watching within this leg in here. So let's go to a 4-hour chart. Let me take off the volume. We know the volume is supporting all the theories I've been talking about. Is we're going to look in here, right? So we're going to say this is our first leg. This is our second leg. We're currently in our third leg in here, which does not look to be fully complete, but it could be. We're going to find out very shortly this week, because if I go on a log chart in here, we didn't hit the 1272. I take off the log chart, the 1272 is a little bit further away. So we're talking 361 or 364. So it does not look fully complete. And that might not end there. It might have to hit the 1618 extension, which right now with the log chart being off is 346. Log chart being on is down at 350. I am going to favor that we will get into that 350 range. But this move is still going to see a bounce. Okay, so we are in this third leg in here. Okay, so let's just recap this. First leg, second leg, third leg. Third leg doesn't look complete. But in the third leg, which is the one we're watching right now, is we are seeing this move in here currently taking place. So it tells me we're on the third leg in here. We're going to see a bounce before we complete this leg down. And that will complete this entire move. So we got this move in here. That was completed. This move in here was completed. And down into here, this move is going to be completed. Once we complete this move in here, and those are the signs that I'm looking for, the move that comes down into here, then we will go on a big rally. Okay, so if we get down into here, we will go into a big rally. I'm going to anticipate this rally does something along those lines into this zone, which is going to knock us back down. Okay, stay with me. And then what this will look like is 1, 2, 3, 4, right? We're not going to break through here, and I'm going to share that. And then our fifth leg, a little bit lower. And then we'll have our generational wealth opportunity. So I'm anticipating that this move is not going to break through there. Okay, we're going to look at that zone as the potential next short, the next big short. Okay, can we get up in this zone? We have to see where we bounce for first, right? We have to see where this bounce is going to be. Let's just say we do hit the 161 extension, which brings us to 350. Then I'm going to be looking for a move into this range, this 383 range, get down into this channel that's going to push us down, hit that, and then boom, start another leg. But while this is happening, okay, while this is happening here, this is where the money's going to be made. First move off of the bottom, make some money. Second move, preserve the capital. If you're going to try and go both ways, then you're just going to wait to see the top and try and short it in here. Once it doesn't come back down and make a new low, here's going to be the next big opportunity for bull money to be made in this trade. In this zone, there's going to be some significant rallies. There's going to be huge rallies across many stocks. So we need to be prepared for that and be ready to capitalize that. That is the bigger picture view. That is the bigger picture view that gets us down into the 327. Because what we'll be looking for is drawing it out again. 1, 2, 3, 4. And then boom, we get down into this range, just a 5, and that's where the generational wealth opportunity comes. There is trades about to happen in here. And what we're trying to figure out in here is where is the bottom going to, it's going to be a short-term bottom, very short-term bottom, going to start. Did it start Friday at the end of the day? Or we need to gap down one more time tomorrow. We gap down tomorrow, right? And we would say, well, that probably just ended it right there. Right, this is just going to cause maybe boom and then gap down, and then we see our bounce starting to happen? Or is this in here going to see a better rally right now from this range, right? We're going to get up into here. So this was the start of the bounce. We're going to hit a higher low, and then we're going to go, and people are going to believe, oh, here we go, here's the move, and this is where the trap's going to happen. And then we're going to see that move down in here. What's going to cause, that sharp of a move? Is it going to be sharp? Is it going to be choppy? Is it going to be events? Is it going to have to do something with, the Russia escalation, China situation, whatever it is? I am going to look for this move to not break through here. So if this was the start of our bounce, which it definitely could be, right? That we're going to see the top out, higher low, and then bounce into here. And then from here is another short opportunity. So if you're getting into shorts at the end, this is what I said coming into Friday. If you're getting into shorts, you're going to run into some risk because we're going to be looking for this bounce. You can see it started to happen at the end of the day. So if you were swinging shorts, that, coming into like weekly short-term stuff, or you're going far out of the money stuff when the market's about to bounce, that's where you put on the risk. But I think there won't be too much risk once we come back and backtest this range. So I think we're looking for this week, we're looking for where's the move about to happen, short-term move. Maybe they want to gap it down into here, 364, and then we see a real better bounce because we'll have some divergence play out, bounce get into this range, and then this leg down to complete this move, not to complete a bottom, right? Not to complete a complete bottom, okay? And then one big leg up, we will be looking for the big leg up. Maybe the big leg up is that November, December run, right? Looking at the seasonality chart, maybe that's the November, December run, which means October is going to be messy. We're going to see this short-term bounce in October. We're going to drop back down to the end of October, and then that big bounce into here is the November, December run, right? Let's just say this takes more time. It takes time to play out, right? It's going to be very choppy. It's going to be hard trading. And then in November into December, we get this run. And then the start of next year, people start crying that, market's too hard, this and that. We're not going to do that because we're getting prepared. We're being prepared with these scenarios and these roadmaps. So let me recap that on a cleaner chart. What we're looking for is to eventually get down into this range, okay? To eventually get down into this range. We should not get there on this shot. The chart is coming down too vertical, which tells me this is our third leg. 1, 2, 3. Regardless of breaking the new lows, headlines, oh, we broke June lows, all this stuff, the market will bounce, right? It will bounce and it'll get a little bit choppy. We'll look to see a rejection somewhere in this range, right? We'll look to see something get rejected in this zone, in here, or off of this range if it doesn't even get that strong, and then to make that descent in here. So what you're looking for is short-term bounce, okay? Short-term bounce, bigger drop to about 350, then the year-end bounce, right? Year-end bounce, and then down into that 327 range. And that's where the generational wealth opportunity comes. This week, you have to be thinking about if we're going to gap down and flush tomorrow, get ready for the bounce. Short term. If we do not gap down and flush tomorrow, we're going to be looking for the short-term scenario in here where we see a move back up into this range and anticipate this range to still be shorted in here, okay? Is it a significant enough bounce that that's enough to get up into that range based off of what the market's doing? It'll cool it off enough, a 3% bounce, it'll cool it off enough. And then it will make sense that the new leg gets choppy down. It's not going to be so smooth, right? It will get choppy and it could, it could be volatile, but likely it's going to be choppy. So be prepared. Bounce, new leg down, year-end rally. That's what we're going to be looking for. But the year-end rally to be a trap and to be prepared to short that trap. And then the money is there to be made. And if you have a good mindset, you're in a great space, you could really capitalize and change your account around, change your life find yourself in a place where you say all the struggle that I went through to learn trading, to make so much, to lose, to grind was all worth it. Because in the end, I nailed this move. And this is the move that I needed and I wanted and I was looking for. Peace out, everybody.